Yeah, good morning, all. Good morning, everyone. This is a chilled Saturday evening, 17th, I think 17th June, 2023. Welcome to class. This is Professional Taxation 2 class, Professional Taxation 2 level. And the title of the course is Tax Audit and Investigation. That's the course title. So we are taking a class last week. I think the video will be uploaded for you to go through the proceedings of that class. We did introduction to audit and investigation last week. So today we are going to take tax audit to investigation principles. Tax audit to investigation principles is going to be divided into two parts. Today will be the part one aspect of it. Then next week we'll take the part two, just like that, weekly like that, until we get to the last class, like the 12th week, which will be tax audit procedures and risk assessment. Before your exams, you will have been well groomed, well grounded to go and face your exams. So sign up to all ICAN online tutors, reach out to our admin. There are various ways you can connect to us through WhatsApp, through telephone, or mobile, through website, through YouTube, so through Instagram, through Facebook. So we are everywhere. You can reach out to us. So if you are hearing me, can you just indicate that you are hearing me by saying hi? Let me know that people are over there listening to me.
I'm hearing you loud and clear.
Okay. That's Lutheran Assembly. Which of the Lutheran Assembly is that? Okay. Ambrose, are you there? Then Francis, I can see Francis. Okay, so I hope they are hearing me. So let's proceed. So as I've already said, this morning we are handling tax audit investigation principle. So this is the topic of the day. And we are going to do justice to this within 2 hours. We will round off the class. So learning objective for this class this morning. So by the time we close this class, we will be able to understand the meaning of tax audit and tax investigation, to understand the meaning of tax audit and tax investigation, to be able to explain the rules and objectives of tax audit and tax investigation. you should be able to explain the rules and objectives of tax audit and tax investigation. You should know the different types of tax audit and tax investigation. You know the different types at the end of this class. To be able to differentiate between desk audit and field audit, criminal investigation and civil investigation. You know, this topic is divided into two: tax audit and tax investigation. So the audit aspect of it have desk audit and field audit, while the investigation aspect of it has criminal investigation and civil investigation. So you should be able to differentiate all of them. Though we are not taking everything today, then explain the characteristics of tax auditor, to be able to do that. State the legal framework for tax audit, and state the factors that should be taken into consideration when selecting taxpayer for tax audit. Then explain the right and obligation of taxpayers. Discuss the rule of forensic accounting / investigation. Forensic accounting / forensic investigation. So this is the learning objectives, what you should be able to know at the end of our daily proceeding. So I hope you guys are hearing me loud and clear there. Are we there?
I can hear you loud and clear.
Okay. All right. So definition, nature, and purpose of tax audit and tax investigation. Definition, nature, and purpose of tax audit / investigation. So we are trying to x-ray what this topic is all about. So a tax audit, by now you should know that is an examination of whether a taxpayer has correctly assessed and reported their tax. Because at times you have what is called self-assessment. So for the fact that they have the opportunity to conduct self-assessment by themselves, they might just break some rules and awarded themselves, navigate the process of reducing their tax liability. So that is the need for tax audit to reassess what the client did or even what the client reported, what the taxpayer reported. So a tax audit is an examination of whether a taxpayer has correctly assessed and reported their tax liability and fulfill other obligations. Tax audits are often more detailed. It's often more detailed and extensive than other types of examinations, such as general desk check, compliance receipt, reviews, or document matching program. There are, of course, exceptions to this rule. Conditions and approaches vary from country to country. Generally, giving you a background, an audit will examine the issues seen as most significant to achieving an accurate assessment of taxpayers' tax liability. So typically, these issues will include any indication of significant unreported income. So by the time you scrutinize their report, financial report, some calculations or computations should give you a kind of a leading to what the client or the taxpayer might have concealed, or income or revenue that they might have concealed. So this can give rise to you deciding to carry out an investigation on them. For example, as may be suggested by a very low ratio of net to gross business income. So if some indication of that, when you calculate, when you compute their ratios, if the net profits or gross profit ratio or net profit ratio is low, consistently low, this can call for tax audit or tax investigation. So ratio computed from a taxpayer's return or potentially overclaim deduction. If the deductions are high, so items that may be apparent from an examination of a taxpayer's tax return, so you use their return to scrutinize all these things. So, and if you are a tax person, by the time you scrutinize a taxpayer's return, you should know what he has done. Because this is what you'll be doing over the years. A mere scanning through the figures, it should give you an indication of what the client or what the taxpayer has done. The taxpayer might not even know that you know it. He might have done his thing and found himself and realized that, oh, he has beat these people to it. But this is your trade. This is your profession. You should be able to know year in, year out, as you have been doing it. So as you are doing it, you are improving on the tactics of really unveiling what the taxpayer has done. So appearance from an examination of taxpayers' tax return and other information, as well as income tax returns and other reporting. These include supporting documents, which the taxpayer should normally have. So you also use their supporting documents to unveil or unravel hidden things. In the case of business audits, national law often requires a business to obey certain bookkeeping and accounting standard. Another thing is that you should also, as a tax person or a tax practitioner, you'll be able to be conversant with the accounting standard. Don't say I'm not an accountant, I'm a tax person. But what will make your work to be very, very outstanding is your knowledge of accounting standard, because client uses accounting standard to prepare their financial statement. So if they model up the standard or beat the standard to it or misapply the standard, you can from there unveil the tax losses to the relevant tax authority and make more money from it. So if you don't leverage on the accounting standard, you might not know much. Your practice might not be robust enough. So you should know the accounting standard, the basic bookkeeping, national laws, all these Nigerian tax laws, Finance Act, the KAMA, Bovia, Insurance Act. You should be able to be conversant with them. It will add value to your tax practice. So the audit may also involve physical inquiries, such as the inspection and examination of goods in stock premises. So still on divination, nature, and purpose of tax audit investigation, what are the purpose of tax audit? What are the purpose of tax audit? Is to collect unpaid taxes. You don't just do audit or investigation for doing sake. At the end of the day, you are to collect unpaid taxes. You are to ensure compliance with the tax laws. I've already said, Nigerian tax laws, you that want somebody to be compliant with it, you as a practitioner, you should first know the laws. You should first know the laws. It is when you know the law that you will understand whether the taxpayer has broken the law or not. So if you don't know the laws at your fingertip, you wouldn't know whether they have broken the law or they have not broken the law. So the another purpose is to find inconsistency in the tax returns and provide corrections. Find inconsistencies in tax returns and provide corrections. Then also to educate the taxpayers. Educate the taxpayers. Then to determine completeness and accuracy of taxes payable by the taxpayer to the relevant tax authority. Accuracy of the tax payable. Completeness, not shortfalls or part payment or half payment. So completeness of tax payment and its accuracy to the relevant tax authority. So those are the purpose. Do you have in mind any other purpose you think the tax audit and investigation do you have any other purpose in mind for tax audit and investigation? But if examiner asks you 10 purposes, so you only have 1, 2, 3, 4, 5. So you can add the remaining 5. Let me listen to you. You have been listening to me also.
Boosting the revenue of your principal, for me, it should be a purpose where tax, the revenue of your principal, where tax would have been underpaid.
Boosting the revenue. I didn't understand it. Can you break it down for me to understand?
Yeah, if your principal has engaged,
when you say principal, who is the principal here?
The person you are doing the tax audit for is be your principal.
Okay.
So if tax would have been underpaid,
that is if you are employed by IFRS. Sabi?
IFRS in the case of people.
If you are employed by IFRS, so IFRS is your principal.
IFRS is an indirect principal. You are collecting revenue for the federal government.
Okay. Yes, IFRS is federal government itself. Okay, go ahead. I'm listening to you.
But if you are, say, doing this tax audit for a state board of internal revenue,
yeah.
So the purpose is to boost internally generated revenue for the state you are executing the engagement for.
Wow, this is wonderful. You have now hit the nail on the wood. To boost the revenue generation. Yes, very, very correct. So Odasunko, he has added his own. We have 1, 2, 3, 4, 5. We have 6. So you have something to say? Or you are just listening to me?
Then again, if it might not only be to boost revenue, because the audit in itself might also make your principal lose revenue if your principal has overcollected.
Okay. Okay. So the purpose can also be to lose. But is that a good purpose?
Yeah, because if somebody has overpaid you, it is better you cough out the overpayment because the person might be contesting it, and you will lose money in contest of a revenue you don't deserve. Yeah.
So that means that tax audit and investigation can also bring about revenue reduction. Abi? So your principal. Is that what you mean?
Application.
Okay. All right. That is taken also. Taken also. So can we still say something? Others go, let's hear from you. Or should we move ahead? Okay, so let's move ahead. So still on definition, nature, and purpose of tax audit and investigation. So we are to define the tax audit, and we say that tax audit can be defined as a routine examination of the financial statement. Tax audit can be defined as a routine examination of the financial statements in one hand, tax returns in another hand, as well as other books and records of account of a taxpayer, in order to ascertain the taxpayer's level of compliance with the relevant tax laws. So that is tax audit and investigation, or definition of tax audit itself. So in conducting the tax audit, various types of information will be reviewed. In conducting a tax audit, various types of information will be reviewed. These may include tax returns, one hand, financial statements in another, accounting and non-accounting with relevant records, source document or supporting document, minute of boards meetings, bank statements, other documents or records that may be required in the course of the audit exercise. So we have given you the definition of tax audit. So these are requirements. In case examiner asks you, you write in detail and you get your full mark. So we move to classification and types of audits. Classification and types of tax audit. We have mostly two types, which is DEX audit and field audit. This back duty and registration can fall in any of these two, can fall in any of DEX audit, field audit. So, but for simplicity, we split as DEX audit, field audit, back duty audit, registration audit. So tax compliance and remittance. So this is how the web is. This is how the web is. So have anybody heard of back duty audit before? Have you heard of back duty audit before? So if you have heard it, can you speak on it? Back duty audit, can you speak on it? You have heard it before. Some of us work in the revenue service. I hope I'm clear here. I've heard loud and clear. Are you hearing me? If we have participants, let's make it interactive. Oh, you have not heard of back duty audit before? Yeah, Francis, are you talking?
Yeah, I said we can hear you, but I'm just hearing about back duty audit.
This is the first time.
Yes.
Okay, that's good. So who have heard it before and who have understood what back duty audit is? Okay, you go and investigate and find out what back duty audit is. So I'll come back to us. So still on further classification to make it more enlightening. So tax audit in a global context may be executed through the following. Tax audit in a global context may be executed through the following. So that's why we say it's divided broadly between desk and field. So all these can fall either between desk and field. So mail audit, this is the type of tax audit process whereby relevant tax authorities notify and request the taxpayer to provide additional documents. The taxpayer might have filed his returns. Maybe the tax authority is not satisfied with the return, so they ask the taxpayer to provide additional documents or clarification on certain tax returns, declarations, and deductions. This can be sent to you through mail. They don't want to see your face, and they don't want to come to your office. Then office audit. This is an additional audit process to the mail audit, whereby taxpayer need to visit the tax office. So this one now you are summoned. The taxpayer is summoned to the tax office to provide additional information as requested by the relevant tax authority. That is office audit. Of course, field audit and desk audit. As I said, this mail audit and office audit can also fall between field audit, because the main major classification is desk audit and field audit. What is a field audit? This is an audit process whereby tax officers directly examine the documents submitted and question the taxpayer on site. On site, this one, on site means they visit the taxpayer's premise, scrutinize their books. Then desk audit, this is the type of audit process whereby the tax officer reviews the documents submitted to the tax authority monthly, annually, in line with the provision of the tax law. Desk audit, you sit on your desk and do the job. So you don't go to the taxpayer's premises. So as I said, this mail audit can fall within desk audit, while office audit can fall within field audit. That is why I said the major or the main classification is field and desk audit. Take note of that. So these are basically two types of tax audit I've already said, already mentioned it. Desk tax audit and desk examination on one hand, then field audit in another hand. Those are the two main classification of tax audit. Take note. Don't say I didn't tell you. So we take on desk tax audit now. Desk tax audit. Desk tax audit is the examination of financial statements and tax returns submitted to the taxpayer. It involves carrying out analytical review procedures using accounting tools of interpretation like ratio analysis, trend analysis, etc. The examination is carried out in the tax office by highly trained inspector of taxes without visiting the business premises of the taxpayer. So the exercise is carried out on a routine basis, ensuring that most, if not all, of the returns submitted to the tax offices are subjected to this audit. The focus of desk tax audit is to ensure completeness and accuracy of the information and documents submitted to the tax office. Where necessary, the tax inspector may issue the queries on the returns filed by the taxpayer, requesting him to forward additional information. So by the time you conduct the ratios analysis or analytical review, you might have seen some loopholes in the computation of the taxpayer. So you will require additional document. That additional document is to build evidence for you to really investigate further, then come up with your finding. And your finding is for you to collect a complete tax, from the taxpayer. So to forward additional information and documents to the tax officers, even appear in person. So it depends on how the situation will be. If you get worse, you can now invite the taxpayer to clarify some issues in the returns. So the exercise is routine in nature. The outcome of a DEX tax audit may lead to the conduct of a field audit. So if the DEX audit is not satisfactory, it can switch to another type of audit called field audit. That means the tax practitioner or the tax worker will go to the premises of the taxpayer to carry out further scrutiny. So whenever additional information or documentary evidence is required to satisfy the inspector of taxes carrying out the DEX tax audit. So that is DEX tax audit for you. Let's move to field tax audit. So field tax audit is the examination and vouching of taxpayers' books. Examination and vouching of taxpayers' books and records carried out in the business premises of taxpayers to authenticate the tax returns and account filed to the tax office by the taxpayer. The need to carry out exercise in the taxpayer's premises is to enable the tax auditor confirm the existence and adequacy of the books and records of the taxpayer, assess and examine as well as obtain appropriate information directly from the officials of the taxpayer. So why do you think that field audit is necessary? Why do you think that field audit is necessary? Why should we not just sit on our desk and do the audit? Why should we not just stop at desk audit? Why do you think that field audit is necessary?
Hello.
Yeah, I'm here.
Sometimes the documents submitted by companies does not provide enough information or maybe some discoveries which requires some to get proper explanation from other books which probably resides in the premises of the taxpayer, so that you get complete information for the audit.
Okay.
I think that my opinion on why the visit to the field audit is done, in order to do proper audit maybe after the next review, some things are discovered, and maybe the taxpayer contests whatever has been provided as their payment due, or maybe what they provided or what they paid is not up to what was raised as penalty, or let's say the tax that is expected of them. And so in order to get complete information, or to properly back up, that is from the part of the taxpayer, in order to justify whatever they are saying, they need to provide more books, and of this, the auditor or the tax practitioner will have to go to the premises in order to verify and ascertain their claims.
Okay. You are very, very correct. Excellent response. Thank you, Francis. Okay. So nature of audit, be it desk or field, it has different nature of carrying out this audit. Full audit, this is a comprehensive examination to ensure substantial compliance. This is used if audit risk is high. So if audit risk is high, you use full audit to get the full picture, clearer picture of what has really happened. And specific issue audit. This audit is focused on a number of specifically identified issues. Maybe you are just to tackle the revenue aspect of the taxpayer. So about the taxpayer or wider industry issues. The wider industry issues might be that maybe people, which example will I use now? Maybe people in the banking industry. The banks, and you have different types of banks. You have commercial bank, you have merchant bank, you have industrial bank, you have mortgage bank, you have microfinance bank, you have development bank or investment bank, and so on. And you find out that there's a pattern with the tax authority find out that there's a pattern with microfinance bank, or what the microfinance people, the way they file their tax, maybe they suspect that they are doing certain things. So they can carry out specific issue audit on microfinance bank. So I was just using that to explain what specific issue audit might stand for. So it should be noted that the scope of an audit is not cast in stone, and the issue under audit may change as further information emerges. So they can transform. It might be that you were doing specific audit, specific issue audit. Then you now discover something, and it will now turn to full-blown audit, full audit. So it's not cast in stone. It depends on what you want to achieve with it. And the audit can transform itself to another type, depending on what has been discovered. So rollover audits, these audits serve as a follow-up on issue that emerged during the previous audit exercise. Rollover audit, or what is called follow-up audit. So these are nature of how the audit takes its form, be it desk audit or be it field audit. So audit scope and intensity. Audit scope and intensity.
I have a question on the last slide, please.
Okay, go ahead.
Concerning the if that's under full audit,
Yeah.
that it's used. This is used if audit risk is high. I need to get more explanation on that, please.
Okay.
Yes.
All right. You might not really get deeper. If you're an accountant, you would have taken audits and assurance. So you take audit and assurance in the skill level, just like in this level now, professional 2 level. Then you will take advanced audit and assurance in the professional level, the final level. So there and then you will be tutored on what audit risk is all about. So there's a topic called audit risk assessment. So when you are planning the audits, you are also checking out the area of audit risk. You know, the audit risk is that they are a risk component. Trying to explain to you, it's a risk component that made up of the audit risk. You have inherent risk, you have control risks and dictation risks. So by the time you multiply these 3 risks together, that's what gives you audit risk. So inherent risk is the risk of the business itself. Every business has its own risk. If we are auditing an airline, there's a risk there. If we are auditing a bank, they have their own risk. If you are auditing a manufacturing company, they have their own risk. If you are auditing an insurance company, they have their own risk. So the risk of where risk can be high in the bank is cash aspect of it. Then loans, where you have non-performing loans and all those stuff. So if you are a tax auditor and you have checked the taxpayer's record, the taxpayer is in the banking industry. It will be different from the taxpayer in the aviation industry. You know the area of risks in the aviation industry. So audit risk will also be part of your tool to understand. A part of the tool you will use to make your job easier, to make you to really understand what to do. So assuming you are auditing a client in the banking industry, and you look at his financial statement, and you see that the area of high risk should be loans or cash management or whatever. So, and you have seen that the client did not have high non-performing loan. When you are scrutinizing his financial statement, you've discovered that the client, through his record, did not have high non-performing. You know what non-performing loan is?
Yes.
Do you? Those loans that are, and it's been classified like 30 days, 60 days, 180, and 360. If it reaches 360, that means it's a bad loan.
Yes.
A bad debt. It has to be written off. So, and you have checked his book. The financial statement did not indicate that. But when the person is now paying tax, he's now imputing that he is having bad non-performing loans. You can use that to reduce his tax liability. Do you understand what I mean now?
Yes, I do.
That is how the audit risks come into play.
All right.
So the client that have a high audit, we can have a high audit risk, can have a low audit risk. So when you understand this, we should be able to know whether the client is playing the tax authority to its game or not.
Okay.
Do you get my explanation?
All right, I do.
Okay. All right.
Thank you very much.
You're welcome.
Hello, I have a question too.
Okay, go ahead.
Yeah. And the nature of audit that you've explained, I want to believe that before somebody goes for an audit, you normally do a letter to the company or organization you're going to audit.
Yes.
And the content of that letter normally details your audit objective, the specific thing you want to look at. So in course of this audit, and you may need to switch from, say, specific audit to another full audit, would you need to re-inform the organization that the letter we did you earlier, that we are coming to specifically look at this particular thing, that the audit has now changed to full audit? Do you need to redo another engagement letter informing the organization that it is now a full audit, or do you just continue?
If need be, you can do that. When you are doing specific issue audit, some of these audits start from your desk. If you are doing a desk audit, you don't need to write any letter to anybody. Abi? Are you there? Are you with me?
I'm here.
If you are doing a desk audit, as we say, it's a routine audit done by tax inspectors. So you don't need to write a letter to the client. A desk audit is a kind of a PIP audit. So the client is not aware of what you are doing, but the taxpayer is not aware of what you are doing. It's a PIP audit. So you just PIP into it. So you don't need a letter for that. When you are doing an example of this kind of specific issue audit, maybe you just discover that people from a particular sector are misbehaving. You just carry out a routine check on them. But this is at the desk level, or any other desk audit at all. You don't need to send a letter. If you send a letter, that means you have already put the client on notice. He might quickly go and correct his books. So it's what you do from your office. It is when you now stumble into certain things that warrant full audit, you can now send a mail or say a letter to that client that you are coming for a full audit. Do I answer your question?
Yeah, yes, you have.
Okay, all right. Any other question? Ask now before your exam comes. So, audit scope and intensity. Audits can vary in their scope. We've seen audit by nature. We've seen audit by nature. We've seen audit by types. We've seen tax audit by types, tax audit and investigation by types. We've seen tax audit and investigation by nature. So let's look at tax audit and investigation by scope. So audit can vary in their scope and the level of intensity to which they are conducted. For this reason, various terminology have evolved to describe different types of audit activity. Full audit, we've talked about that. full audit can find itself in nature, can also find itself in scope, because it depends on the wider coverage. So the scope of a full audit is all encompassing. It typically entails a comprehensive examination of all information relevant to the calculation of taxpayers' tax liability for a given period. The objective is to determine the correct tax liability for a tax return as a whole. Some countries' full audits are carried out as part of random audit programs that are used to gather data on the extent, nature, and specific features of tax compliance risk for compliance research purposes, and or the development of computerized audit selection formula. Given their broad scope, full audit are typically costly to undertake. Substantial program of full audit will require considerable resources and reduce the rate coverage of taxpayers that could otherwise be achieved by more varied mix of audit types. So this full audit takes a lot of time, time that we would have used to do desk audit for maybe 200 companies. You might just use the time to do a full audit maybe for like 10 or 20 or 50 companies, whereas you have done like 200 company desk audit and still recover what you want to recover. So it's time consuming and resources as well. Not only time, because the people that you engage, you will have to pay them. So limited scope audit are confined to specific issues, just as we have a specific purpose audit in the nature, when we were looking at audit by nature. So confined to specific issues on the tax return and all a particular tax scheme arrangement employed by the taxpayer. So the objective is to examine key potential risk areas of non-compliance. So if you are to do a compliance audit, so a limited scope audit is the best. So we are to look at which area has this taxpayer not complied, which area of the law. So we are not looking at a very wider horizon. So these audits consume relatively fewer resources than full audit and allow for an increased coverage of the tax population. So you can cover the tax population. Because you know, when you are working in a tax office, I think they will give you a tax, they will allocate the companies to you. If you allocate 200 companies to you, it's you that know how you will cover them within a year or so. And you devise which method of audit you will use for you to cover your target or meet your target. So that is limited scope audit for you. Then single issue audits are confirmed to one item of potential non-compliance that may be apparent from examination of taxpayers' return given their narrow scope. Single issue audits typically take less time to perform and can be used to review large number of taxpayers involved in similar scheme to conceal non-compliance. I'll give you an example of a microfinance bank. Maybe they have discovered the pattern of their tax returns or tax filing or tax payment. So they can carry out a single issue audit on them and unravel what really is going on there. So it can be used to review large number of taxpayers involved in similar scheme to conceal non-compliance. Audit can vary in the scope and the level of intensity to which they are conducted. For this reason, various terminology have evolved to describe different types. Okay, it's a kind of repetition. can be used to review large numbers of taxpayers involved in similar scheme to conceal non-compliance, period under examination. Audit can focus on one financial year or accounting period, or be extended to cover multiple fiscal periods. So this single issue audit, maybe you just discover something, there's a new discovery. I'm still sticking with the microfinance bank ways of filing tax returns, and the tax authority might have discovered something. And maybe this single issue audit was for last tax year, last year of assessment, and something is discovered. So it can change, and they extend it to 5 years assessment. They went back even to those years that were already audited. Even the years that were already audited, they can went back 5 years to really scrutinize their books again. Maybe so due to the new discovery. So that is what can also happen. The audit can focus on one financial year or accounting period, or be extended to cover multiple fiscal periods. An audit can focus on specific part of the taxpayer's activities, such as sales, or what's called revenue, goods in stock or inventory, specific incidents or transaction or activities such as those carried out in a branch or subsidiary, or specific tax obligations. An audit can vary in its level of detail. Sometimes the taxpayers' affairs are examined in detail, and in other situations, subject to the level of risk perceived. I've explained what audit risk is all about. So merely superficially location of audit. Tax audit can be conducted in different locations. Sometimes there is a need to carry out the audit at the taxpayer's business premises. In other situations, the books and record required to complete an audit can be collected by or sent to the revenue body. When we use the word revenue body, can also mean federal inland revenue or state inland revenue. And the audits work performed in the office, tax audit can be categorized as field audit or office or desk audit on this basis. So we are still saying it, so we have been repeating. So we move to characteristics of tax auditors. They need to possess certain property. They need to possess certain properties. So a tax auditor should possess some requisite characteristics such as the following. They should have good knowledge of tax laws. I've also hammered on this area earlier on. Good knowledge of company law, as Company and Allied Matters Act as amended 2020 or enacted 2020, year 2020. So Insurance Act, Prudential Act, that is Prudential Guideline of Banks and Other Financial Institution Act, BUFIA, Insurance Act, Pension Fund Administration Act. So you should be able to understand all those laws. Must have an inquisitive, inquiring or probing mind, or what is called professional skepticism. You must go to the audit with professional skepticism. In accounting, it is called professional skepticism. So you must be patient, must be courteous, must be honest, must not be biased. That is, must be objective, must be analytical, must exhibit a high level of professionalism at all times, possess very good communication skill. So what else can you add here? You are going to be one of these people. What do you think that you can add here? You are going to be one of them very soon, or if not already, if you are not one already. So what can you add in this place?
Tax auditor must be integrous. That must have a high level of integrity.
Integrity, yes, I agree with you. High level of integrity.
Must be IT compliant.
Must be IT compliant, because these days, if you are not IT compliant, you will not see any tax to audit. They are using Tax Pro Max now to file returns. So if you are not IT compliant, you are gone. And more of tax software will come out. So a lot of things will also change. So you have to be IT compliant. Thank you for that.
Okay.
So any other one?
Yeah, must have good inter and intra-personal relationship.
Inter and intrapersonal relationship. Yes, because you'll be dealing with third parties, second parties, and third parties. So if you don't know how to manage them, don't know how to manage relationship, it can affect your work. Or if you are a tax practitioner, independent practitioner, it can affect your clientele. So you must have good interpersonal relationship. I agree with you. So we all are taking notes. So your questions are not far from all these things. So. Okay, let's proceed. Rules and objective of tax audit and investigation. Rules and objective. So what are the rules and objectives? Is to determine whether or not the taxpayer have complied with the relevant tax laws, and if not, to take necessary action in line with the tax laws. So if the taxpayer have not complied, the practitioner or the authority takes the necessary action in line with the tax law. Discovery of existence of tax fraud. Discovery of existence of tax fraud, and therefore recommend for tax investigation. But I ask a question, what can lead to field audit? So somebody give me a very good answer. Another reason can be fraud. Tax fraud can lead to, when you discover a tax fraud, so you can call for field audit also. So they discourage tax evasion, thereby enhancing higher tax compliance rate. When you enhance higher tax compliance rate, you have discouraged tax evasion. Rules and objectives of tax audit and investigation. So another rule and objective is to provide ways of educating taxpayers on various aspects of tax laws. Another rule and objective to encourage voluntary compliance with tax laws and regulations. Voluntary compliance with tax laws and regulations. Another rules and objectives. The tax audit plays an important role in achieving the objectives of Nigerian tax administration by providing a tool to ensure that taxes are calculated based on the Nigerian tax laws and provisions. So you don't just calculate somebody tax liability based on your assumption or based on your own imagination. your computation is based on Nigerian tax laws and provision of tax act and so on. Like the recently released Finance Act. So whatever you're doing, whatever you are doing should revolve around that. It shouldn't be outside. Otherwise, even I trust all these clients, they take tax authority to court all the time. So when they just see that loophole, they head to court and claim damages. Take note for that. So the rules of the taxpayer audit program. The audit program of a revenue body, when I say revenue body, some can say relevant tax authority, or some can say inland revenue service or state revenue service, they all mean the same thing. So the audit program of a revenue body performs a number of important rules that effectively carried out and make a significant contribution to improve administration of the tax system. These rules are described briefly here under. Promote voluntary compliance. We are just saying it again. The primary rule of the audit program is to promote voluntary compliance by taxpayers with the tax laws. It seeks to achieve this by reminding taxpayers of the risks of non-compliance. So if you don't comply, there are penalties. So, and by engendering confidence in the broader community that serious abuses of the law, of tax law, be detected and appropriately penalized. Detect non-compliance at the individual taxpayer level. So we have to detect non-compliance, that is the rule. So by concentrating on major area of risk, example, unreported cash income, and those individual taxpayers most likely to be evading their responsibilities. Audit may bring to light significant understatement of tax liabilities and additional tax revenue collection. Take note of all this. Another rule of audit program is to gather information on the health of the tax system, including patterns of taxpayers' compliance behavior. So you can compute compliance behavior of the taxpayer through your analytical review, through ratios, through trends, and so on. So the result of normal audit activity may provide information on the general well-being of the tax system. Audit conducted on a random basis can assist overall revenue administration by gathering critical information required to form judgment on overall level of tax compliance that over time can be used to identify trends in overall organizational effectiveness and to gather more precise information that can be used to inform decision-making on future compliance improvement strategies to refine automated risk-based case selection process and even support changes to tax legislation. So this is what taxpayer audit program can do. When you gather information, you check whether the tax system itself is okay. As Nigeria produce Finance Act every year. So this taxpayer audit program can contribute, can make input to the Finance Act. Probably what you have discovered, maybe you would have discovered is that there's a loophole in a particular tax policy. And this loophole is discovered through taxpayer audit program. And this policy can be rejigged, can be changed, or can be enhanced, or can be upgraded, or can be updated. And that can reflect in the new Finance Act that will be issued or that will be published. So these are a lot of things that can be done. Like in the tax pro max that came up, probably that was done to resolve certain issues of tax evasion or tax avoidance and all the tax evasion scheme. So these days, those schemes by the taxpayer has been reduced. It might not completely be wiped out, but reduced to the barest minimum. So it can be used to gather critical information required to form judgment on overall level of tax compliance. That is what can be done. Can be used for decision making on future compliance improvement strategies. The tax audit program can bring about strategy for improvement of compliance by taxpayers. Can also use to refine automated risk-based case selection process. You know, as I said, there's going to be a lot of tax audit tax software. Or tax software. These days, we are even moving from software to artificial intelligence. So all these things are coming up, and this taxpayer audit program can aid all that. It can also aid changes in tax laws, changes in tax legislation. So that is all these advantages under information gathering on the health of tax system. So information gathering on the health of tax system, you can see that you have gotten up to 5 different advantages of it. So another one is to gather intelligence. Audit may bring to light information evasion and avoidance scheme involving a large number of taxpayers that can be used to mount major counter abuse projects. So you can use it to launch counter abuse projects. As I've been using microfinance bank sector as an example, you have discovered something and you launch a counter abuse project on them and recover all the taxes due. So another rules of taxpayer audit program can be, it can be used to educate taxpayers. Audit can assist clarify the application of law for individual taxpayers and to identify improvement required to record keeping, and those may contribute to improve compliance by taxpayers in the future. Identify areas of law that require clarification. Audit may bring to light areas of tax law that are causing confusion and problems to large numbers of taxpayers, and thus, because when you do review all this tax review, you will know which area the taxpayer is not understanding it well, which aspect are they not understanding it well. So your review will highlight all those areas. So which area is causing confusion and problems to large number of taxpayers, and thus require further effort by the revenue body to clarify the laws, requirement, and or to better educate taxpayers on what they must do to comply into the future. Given the broad range of roles to be performed, the revenue body's audit program typically entails the largest allocation of the revenue body total staff resources. So from this perspective alone, the audit program represents a sizable strategic investment that dictates the need for sound management policies and practices. Take note, please. So we move to legal framework for tax audit. Legal framework for tax audit. Excuse me. Let me check on something on the back briefly. So you can read the slide, read on the slide, or come back and do some explanation. Yeah, and we are back. Are we still there? Are you hearing me? Are you guys hearing me loud and clear?
Yes, I can hear you.
I can hear you.
All right. Okay. Let's continue. We are talking of legal framework for tax audit. So the efficiency and effectiveness of a revenue body's audit activities depends critically on the nature and scope of powers in the underlying legal framework in place. So federal inland revenue has some powers given to it by the Constitution, so given by it by various tax acts. So including the provision of adequate powers for obtaining information and an appropriate regime of sanctions to deter and penalize non-compliance. So the efficient and effective conduct of audit activities requires that a revenue body audit and investigation staff have appropriate power of access to information held by the taxpayer and other parties so that taxpayers' liabilities reported in their returns can be properly verified, or in the absence of returns, be accurately established. There should also be an appropriate regime of sanction to punish, to deter non-compliance. For this reason, revenue bodies require a set of powers and sanctions in the legal framework supporting the conduct of tax administration activities that include the provision of adequate powers for obtaining information and an appropriate regime of sanction covering the various offenses that may arise. So different offenses are being committed by taxpayers, different offenses or different sanctions. So in practice, this legal framework may be set out separately in the laws governing each tax administered, or preferably for ease of legislative maintenance in a single comprehensive law. It can be in separate subsidiary laws. It can also be in a single comprehensive law in some countries like that on tax administration that provide a common set of provision covering all taxes. Why have a legal framework? Why? Can you answer that question? I have a legal framework for tax. Are we there?
Yes, we are.
Okay.
Having a legal framework is to serve as a guide to, let's say, the tax practitioner on how to carry out his activities. It's like a guide, what is expected, how you are to do it, and also to profile sanctions to encourage prompt payment of taxes.
Okay.
That's from part of the taxpayer.
All right. So you will be a very good tax practitioner. All right. Thanks for that. So a tax audit is one of the most sensitive contracts between the taxpayer and revenue body. The presence of an auditor in a taxpayer's private dwelling or business premises, coupled with the exploration of private and business issues and the gathering of information from taxpayers' books and records, or just the disruption of day-to-day workflow, represents a burden on the taxpayer and may be seen by some as an unwarranted intrusion into their affairs. Notwithstanding this, tax audit remains the only effective method for ascertaining additional facts or verifying provided information. So legal framework are essential to provide integrity in the way tax administrations carry out audits and to ensure that taxpayers' rights are properly protected. And as such, in many jurisdictions, the taxpayer may request a review of any proposed assessment or an explanation of the audit techniques used and adjustments being proposed. This request may be made to the revenue body or an independent third-party body. A question can prop up: why have a legal framework for tax audit? So Francis did a justice to it, so you still have more answers here. The examiner can test you with that question to be able to write more on it. So tax audit fundamentals. Tax audit fundamentals. So the key element of such a legal framework as it relates to the audit function, these are taxpayers' record-keeping obligations. Those are the fundamental of it. Taxpayers' record-keeping obligation. They have to keep their record. The financial statement should not just fly from the moon. Where are the source documents used in arriving at this financial statement? So giving tax official access to taxpayers' books and record, you have to, or a taxpayer have to give tax official access to the tax, the books, their books and record. Giving tax official access to third-party information source. If you have a third party, if you say your receivable balance is this, the tax auditor is at liberty to verify that receivable balance. He has right to reach out to the third party on that list. Any third party that appears on that list, he has the right to reach out to them, maybe send them mails for confirmation and all that stuff. So you have to give them access for that. So obtaining information from other countries' revenue bodies. So if you have a kind of double taxation issue or double taxation treaty, you have offshore businesses, they have the right to obtain information from other countries' revenue bodies. So that's the country revenue that you reside. Powers of revenue bodies to amend returns and sanction for non-compliance. So those are elements you can read in detail for that. There's still a legal framework for tax audit. The relevant legislations that regulate the imposition, assessment, and collection of revenue in Nigeria includes, top on the list is 1999 Constitution of the Federal Republic of Nigeria, then Companies Income Tax Act, CITA, Cap C 21, Law of Federation of Nigeria, 2007. Value Added Tax VAT Act, Petroleum Profit Tax Act, PPTA, Capital Gain Tax, CGT Act, Tertiary Education Trust Fund Administration, Tertiary Education Trust Fund Establishment Act, 2011, Debt Fund Act, Personal Income Tax Act, PITA, National Information Technology Development Levy, NITDL, Stamp Duties Act, SDA, FIRS Establishment Act, 2007. So which act do you think is not here that you can add to it? Do you have any other one? So these are the legal framework. Do you have any other one that is not here, you think is not here, that you know? What is the latest rate for Debt Fund now? Debt Fund, what is the latest rate, tax rate for it? Who is current? Who is current here? Is somebody saying something?
%2.5%.
2.5%. Is that the latest?
I think it has been moved to 5% from 3%.
Whoa.
Is that the latest?
Yes, yes,
Eh?
yes.
Who is supporting that? Who is concurring that?
3% to 5%. Wow.
Yes, correct. Somebody has gotten it here. Somebody has gotten it here in the mailbox.
Okay.
David Catalyst, 3%.
Okay.
3%.
So you people are not current.
Current.
It's 3% now. Tinubu just signed the Finance Act into law, and it has been increased from 2.5 to 3%. So when you are computing, when you are taking your exam, take note to.
Okay.
Would they not give parameters for computation? Won't the tax rates, are they not normally given in computations?
I think I don't. I think you have written the exam before. Have you written an exam before? Have you written the exam before? For those that have written the exam before, do they normally give you the tax rate?
It's not every time.
Not always. So
It's not always.
That is why you should know them. You should be current.
So sometimes they test you based on the years, like this current act now. This current act that is 3% now. Sometimes they test you by, stating the year, but without telling you the parameter to use. So if you are conversant with, the tax laws at that particular point in time, you can now use this thing.
Okay. Because the 3% takes effect from next month.
Okay.
So we move to audit triggers. Audit triggers to reason for tax audit. Companies, enterprises are usually choosing for tax audits based on any or combination of the following conditions. Self-assessment files. So every large taxpayers and small and medium taxpayer every 3 years based on available audit resources. So audit triggers are self-assessment files. So you use self-assessment file to pick those large taxpayers and small and medium taxpayers every 3 years based on available audit resources. Then genuine information received from intelligence or other IFRS departments or external source about taxpayers. It could also be referral from other regulatory agencies like the EFCC can refer to FRS to carry out tax audits on one of their free or one of their cash. So ICPC also, or report complaint from external sources. External sources can be another country or a whistleblower, or it can be from a television documentary or whatever, or news, or newspaper report. So this can be audit triggers. Then taxpayer would refund claims. Taxpayer would refund claims. What do you mean? What do you understand by taxpayer would refund claims? Can you throw more light on that? Can you explain that? Do you understand that?
Taxpayer with refund claims. Probably the taxpayer might have made the excess payment, or maybe in terms of VAT, inputs and output VAT difference, and the taxpayer intends to claim whatever is due to the taxpayer. Before the refund can be made, the taxpayer will have to be audited to know if actually the claim put forward is valid, or there might have been a loophole somewhere that the taxpayer have made use of in order to have excess claims to make.
Correct. So taxpayers' refund claims can trigger tax audit. So returns showing refund, especially arising from excess withholding tax or VAT. Then taxpayers making nil returns or reporting or declaring losses on a continuous basis. For the past 10 years, he's declaring, then why are you in the business now? If you are really making losses, after 3 years, you should pack up. So that should be triggers for audit. So taxpayers with 3 or more years of loss compared to average profit for an industry that is heavy loss. When you say you make loss, you know, the tax practitioners are also smart. They will gather all the industry in that, all the company in that industry, add up their profits, get the average profit, and compare it with your own losses. So you will know what are you not doing well, or what are you hiding. So in a way, they can still arrive at something. They can project the possible profit that you have made in which you are declaring losses on. Another one is taxpayer with poor adequacy ratios. So when you talk of adequacy ratio, this should be banks. This should be banks that have poor adequacy or capital adequacy ratios can trigger audit. Claims under double taxation agreement. You have double taxation issue. Then based on routine sectorial industry audit, based on routine sectorial industry audit. I've explained that before. Case referral as a result of desk review, examinations can trigger audit. Secondary files, related party transaction. You should know what the related party transactions is. Connection with other taxpayer by way of holding, subsidiary, associate, or related companies could be a criteria for selecting companies for audit. So all those secondary file related party transactions, connection with other taxpayer by way of holding. So if your parent submits a return and you as a subsidiary, you are doing something else, your parent can be used to trace to you. So taxpayers can also use connected parties or what is called related parties. So a parent and a subsidiary, they are related. See, as we are also related by blood or physical, we have uncle, we have auntie, we have sister, we have mother, we have father, we have brother. So also companies can be related. So you can have a parent company, you can have a subsidiary. A subsidiary is just like a child to the parent. You can have a sub-subsidiary, which is a grandchild. You can have associate company, which is like an uncle. You can have a joint venture, which is a kind of a niece or in-law. So just like that. So one action can trigger audit in others. Another one is analytical review of tax returns, transfer pricing, thin capitalization arrangement, and trigger tax audit. Deviation from interfirm comparison can trigger, because when you carry out industrial sector average and there's a lot of deviation, there's high deviation. So when you now get industry average and you see somebody is having undue high profit, you will know that he's doing something fishy, or undue low profits, you know that he's doing something fishy. So returns that are randomly selected can trigger that confirmation verification of poor or extraordinary performance. I've said undue high profit. You should know that something is fishy. After conducting industrial or industry sector average. So you can see that this can trigger or can be a good reason for tax audit. Difference between a tax audit and tax investigation. Tax audits, one is that tax audit is a routine exercise. So tax evasion is usually triggered by suspicion of fraud and other forms of evasion. It is required under certain circumstances. It's not routine. Investigation is not routine. So, two, tax audit is not 100% vouching. It's not 100% vouching. Investigation is more intensive. Investigation can be 100% vouching because it is specific. It's something you want to find out. So you can just seclude that aspect of transaction and carry out 100% vouching that relate to that particular issue. Number two is that tax audit has essentially tax recovery as the outcome. Tax recovery is the outcome in tax audit. That investigation as tax recovery as the outcome. Tax investigation as prosecution as an expected outcome. So tax investigation, there's a prosecution that is attached to it, not just recovery. You have to be prosecuted. You have to be taken to court if it's required jail sentence and penalties and all that. So there's materiality concept in tax audit, and there's no materiality concept in tax investigation. I hope we understand what materiality concept is. Do we? We understand what materiality concept is. So if you don't understand, go and find out and research what materiality is in audit. So 5, tax audit has status bar. That's a time frame, time limit. So tax evasion has no status bar. That is, there's no time limitation. Tax evasion may be carried out beyond statutory period of 6 years. It is wider in scope. So that is the difference. So we quickly look at issues of forensic audits, the role of forensic accounting investigator. The role of forensic accounting investigator is that of fraud. When we talk of forensic accounting or forensic investigation, we are talking of fraud, fraud detection, fraud investigation, and fraud deterrence. So in respect of tax, it is to detect, investigate, and deter tax fraud. Simply put, it is to find answers to the following question regarding a suspected or known tax fraud. So if there is a known tax fraud, an established tax fraud, you should say who carried out the fraud, what is the type of the fraud, when was this fraud carried out, where, which location, which state, how did he do it, then why, what is the motive of doing that, why is this fraud carried out. So for forensic, these are the questions to ask. Still on forensic accounting and investigation, in carrying out these assignments, the task of the forensic investigator is to seek for evidence linked to the crime. You can seek the evidence via documentary evidence or via testimonial evidence. So from the evidence gathered, the forensic investigator developed detailed factual information to establish a case. From the fact established through the evidence gathered through investigation, the forensic investigator is able to recommend and implement corrective action. After we have carried out your thorough investigation, be able to recommend corrective action, document the evidence to serve as a basis of testimony in litigation. In case people move to court, you have evidence to present. Those in the litigation proceedings or criminal charges against the offenders. Sampling and materiality concept have appeared again. I said you go and find out what it is. Sampling and materiality concept are largely irrelevant to forensic investigators. The strictly evidence, hard evidence, and in determining the scope of the investigation and the necessary evidence to be gathered and their documentation. So forensic investigator must be absolutely conscious of the fact that they may be challenged by those adversity affected or litigants or regulators who are skeptical about using the investigator's report. So your evidence must be thorough, because you can also be challenged in courts. You can be sued for damages, can be sued for defamation, and a prize money can be placed or court, what is it called? Is it judgments, the judgment debt or judgment sum? The judgment sum can be placed on you as a forensic auditor. So you have to get your facts right. Get your facts from the source documents and make sure that whatever you come up is factual. and can be proved. So we are still here. Qualities of forensic investigator. He is an investigator, therefore, the generally well-known qualities of the investigator also apply to forensic investigation. Whether it's a forensic or not, an investigator is an investigator. So an investigator has some qualities, even if he's a forensic investigator or not, those qualities also apply to him or her. So the general qualities are sound knowledge of industry, including its business practice and processes. You must have sound knowledge of the industry that you are investigating, sound knowledge of generally accepted accounting principles. I've mentioned this before. You must know the accounting standard, then tax laws, principles, and practices. Good skill in the interpretation of business documents and record, as well as financial control. Interviewing skills. You must have interviewing skills, good analytical skills, good communication skill, written, verbal, and listening. Must be independent and objective. Must have eyes and ears for details and facts. Whatever you will be doing are factual. Factual. This one is not audit. This one is investigation. So it must be factual. Audit is sampling work. You just do a sampling work. But for investigation, you have to do a detailed work, detailed vouching. You must know the detail of every transaction because your outcome is going to be factual. Factors for selecting taxpayer for audit, for tax audit and hearing. What are the factors for selecting taxpayer tax audit? The criteria, which will vary from one type of audit to the other, include, but are not limited to the following: self-assessment taxpayers, at least 2 years since the last audit of taxpayer. You can use self-assessment to select taxpayer with refund claims. We have mentioned that before, especially arising from excess withholding tax credits and or other named reasons. Taxpayer with nil return or continuous loss situation. So that taxpayer with very low adequacy ratio based on routine industry checks and sectoral data, based on lead information received from intelligence of the IRS department or internal source, transfer pricing arrangement, tax planning scheme, claims under double taxation agreements, secondary files, relationship with other taxpayer by way of holding, we mentioned this, industrial groups compliance, evaluation and probability comparison, verification of poor or extraordinary performance, poor or extraordinary. So these are the reasons for selecting. Or it can also be triggered. On the other slide, we consider it under triggers, tax audit triggers. So still on it, referrals resulting from DEX audit, information resulting from examination, other tax, random sampling, when making unusual requests or taking extraordinary decisions such as centralizing, or it's why the centralized operation. If a firm wants to change its operational style, from centralizing to decentralizing or decentralizing to centralizing. So that can be a reason for selecting them for audit. Information from intelligence unit of tax authority and directive from higher government authority can also be reason for that. Qualities of a good tax audit and tax evasion exercise. So if you carry out tax audit exercise, it must meet these qualities. It must, the investigation must be factual. Investigations must be factual, must be compliance with tax laws, must be in compliance with tax laws. So your tax audit investigation must be in compliance with tax laws, must be fair in its findings. Your investigation must be fair, your tax audit must be fair in its findings, must be able to translate their findings into actionable data. So your findings should be transformed to actionable data. Tax audit investigation must be able to understand the stories that each financial report paints. As I say, you must understand financial statement analysis and also tax returns analysis. A tax audit must be able to decipher nuanced data, data that does not gel, that does not connect, data that does not connect. So you should be able to identify it, should be able to decipher them and launch a deeper probe into it. So if you are using software, a software to do the audit, you are using software to do the audit or investigation, it has to be flexible, flexibility of the system. Then your system has to be stable, stability, reliable, usefulness, and specific function. You should be able to perform some specific function. Your system should be, so because somebody mentioned one of the qualities as being IT compliance. That was a very good answer that wowed me. So it come in here also to play. So your IT system has to be stable, reliable, and usefulness nature. Your system has to be easy to use. So, and you should be able to carry out your audits and evaluation within an acceptable response time. Acceptable response time. Your system should be integrated among subsystems. Should be able to integrate your software, whatever software you are using. Should be able to integrate them among subsystems. Should be user-friendly. Should be user-friendly to interface with. Have to be accurate in data processing, and ease of learning. So these are good qualities of a good tax audit and tax investigation exercise. So in case examiner asks you, please don't forget. So I think we have gone a long way today. We've gone a long way today. Before we move to certain question, we tackle some few questions. Do you have any question for me? Did you enjoy the class?
Yes, we enjoy the class.
Ambrosia, you are over on today. You didn't ask any question. Do you have any question for me?
No, none for now.
Okay, the class was very explicit. You understood everything of it.
Yes.
So that's good. So who have a question for me? Or I will ask you my question. Mm.
I have one little question.
Okay.
Is there really a difference between the general practice of an audit engagement as against a tax audit? Because
yeah, go ahead. Go ahead.
When, like I mentioned earlier, it's as if the general audit has a formatted way of doing its thing, more like a tax audit that you can work in retrospect if need comes for you to work in retrospect and all what may.
Yes, what we should consider here is the audit, the principle in audit. Both be it tax audit or be it normal audit, you still deploy the same method. You still deploy the same principle. You still deploy the same principle. Because we've mentioned the concept of materiality here. There's also a concept of materiality in the normal audit. We mentioned analytical procedure, analytical review. There's analytical procedure and review in the normal audit where you calculate ratios. We talk of audit risk. In tax audit is also audit risk. And because all these audit risks now, if you don't get your facts well, the taxpayer whom you are accusing can sue you. So it's a risk to you. And your organization can cover the millions of naira and pay the taxpayer. So that is an audit risk. Based on if you come up with a faulty information. So the principles, the fundamentals are the same. But in the normal audit, then also in the normal audit, we have audit, we also have investigation. In the tax audit, we have tax audit and we also have investigation. But in tax audit, it's within the tax year or assessment year. Then in the audit, the normal audit is also based on the financial year of the company, which has passed, or immediate year, or is it penultimate year? The only difference is that tax audit, you can launch back. You can do many years back, depending on what you have discovered. But the normal audit, you only do audit within a particular financial year. You do it every year, like 2020, you would have done an audit. If you are an auditor there, 2021, you would have done audit for 2021. 2022, you have done just like that. So if you find out something in normal audit and warrant you to do many years backward, that might not be an audit again. You are doing a kind of investigation in auditing. They call it assurance services. So the nature have changed. But in tax audit, you can do as many years as possible. You are still calling it, you still call it tax audit. Except you single-handedly want to carry out an investigation, which is different from the tax. So the concept is the same. The application might differ. Do you understand my answer?
Yes, it has made sense now.
Okay.
It has made sense because maybe because of the nature of what, like you said, the audit risk surrounding what is being done will determine the extent of the framework that will be
the planning itself. So a mere handling an aviation company, you should know the area of high risk and should know how to plan your audits and should also envisage what outcome can be. So risks also help you in your planning, in your decision making also. So the concept is the same. So laws will also tell you what to do. Laws might differ. The laws that govern the normal audit is different from the laws that govern the tax audit. But if conducting audits, be it tax or normal audit, you still apply, you still deploy the same principle, the same concepts that you use in both. So it's the laws that make the difference. Okay. So any other question? Or Sonny, are you satisfied with my answer?
Yes. It's
okay.
It's very clear.
Okay. All right. So who have any other question for me before we move to the final stage of our class? So if you don't have any question for me, let me ask you my own question. So we have 2 practice questions here. Practice questions. These are your exam types question. Under what reason are tax audit and tax evasion conducted? I think there are answers here on this slide. That is question 1. Under what reasons are tax audit and tax investigation conducted? Then question 2, when may a back duty investigation be required? I asked you what a back duty investigation was. Nobody answered me. The question has surfaced again. When may a back duty investigation be required? B, you have just been promoted to the post of Assistant Director of Taxes by FIRS, and you have been chosen to lead a team to conduct back duty audits on companies in Abuja. Briefly itemize 10 of the audit requirements you will attach to your notification letters to the companies. Who can answer me? Which one will you take first? I don't want quietness. So. Because these are the questions you will face in your exam. These are the likeliable question, the likely question.
Are you sure your own is not tougher than their own?
Is it tougher? It's not now. Not tougher.
Okay, the reasons why a tax audit and investigation to be conducted is to ensure that the company has reported the actual, they have filed the actual taxes, you know. Yeah. Just because
They
the
say you
company
should
has
mention 10. You should mention 10 and you are mentioning Abi?
Okay,
What do you say?
this one is the one displayed on your screen. So what are the reasons tax audit and investigation are conducted? That's what is displayed on your screen. So I
that is what? Take it again. I didn't say under what reasons Okay, okay, I understand. Okay,
Yes,
okay.
yes.
But
So
it's
I said it
still,
will
but it's still
tax.
more than one. Is it more than one now?
Okay.
Maybe like, for instance, when there's issues of mergers and acquisition.
Mm-hmm. Okay. So
And
you can this be
sorry?
said to be triggers tax audit?
Yes, I feel it's the same
Because at
thing.
times you guys need to understand grammar. So don't allow question to intimidate you. You should be able to understand English and make things easy for yourself. The examiner might not just come and say triggers for audit and he might put it in another language and you are totally confused. So I need more now, more. Let's talk.
Sometimes, company files tax credit. So a tax investigation is needed to be sure that, they provided the proper documents.
Okay.
Maybe they claim some deductions, yeah, they have to verify it.
All
Yeah.
right.
And
Okay.
sometimes the taxpayer might not include their full income. Yeah.
Okay.
Sometimes there can be calculation errors also. So
Yes, wrong computation.
Yeah.
Yeah, that is what you should also know. As a tax practitioner, you should also be good in computation. It's not what the taxpayer submit to you that you rely on. You should be able to carry out your own computation and check whether what they gave you is okay, is correct.
Okay. And sometimes the taxpayer can report losses where there are no losses, so that just to reduce the tax.
Yes. It's true. It's true.
Sometimes they might not report the actual turnover for their business.
So for reasons for tax audits, if you check my slide, you will see them there. We have already done it. Self-assessments, genuine information received from intelligence, even from the one Ambrosia have also said they are also correct. Taxpayers will refund claims, returns showing refund, especially arising from excessive withholding tax. Then taxpayers making nil returns, taxpayers with 3 or more years of loss, blah, blah, blah. Taxpayer with poor adequacy ratio, claims under double taxation agreements, based on routine sectorial industry audits, case referral, and so on. So this one is for reason for tax audits. The reason for investigation, refusal to file returns. Are you guys hearing me?
Yeah.
So reason for investigation, for reason for investigation, reasons are refusal to file returns, refusal to remit withholding tax and value-added tax deducted at source. A refusal to allow access to record and books, refusal to honor tax office invitation or respond to tax queries, fraudulent conversion of FIRS government checks, intelligence report of criminal activity of taxpayer bordering on tax default, petition against the company disclosing serious tax evasion, understatement or non-disclosure of income, overstatement of income, fictitious asset and expenses, non-filing of tax return or filing incorrect return. As Ambrosia have said, you can compute wrongly, fraudulent procurement of tax clearance certificates, revenue receipts, and withholding tax credit notes. Ambrosia have mentioned that. So, have you now gotten the answer?
Yep.
Okay. Can always play the video back so you get. So when we back DT, this. So back DT was okay. Who can answer it? Anyone? No one, Abi. I should go ahead. Should I go ahead?
Please go
Back
ahead.
duty, I think, is when an auditor decides to assess previous years, maybe because the taxpayer fails to disclose full income details. I mean, they just want to investigate some things about the past years, you know?
Okay. Yeah,
Yeah.
you're in line. Back duty investigation may be instituted by the tax authority into the affairs of the taxpayer when the tax authority discovers or suspects that tax has been lost in the past years due to taxpayers' fraud, willful default, or neglect. Where the tax authority discovers or suspects that tax has not been assessed or has been under-assessed or underpaid in the past years due to tax evasion, it might institute a back duty investigation into the affairs of the taxpayer concerned, with a view of recovering the tax lost or underpaid. In other words, a back duty investigation is conducted by the tax authority in the event of tax evasion. So when tax evasion is sensed, is being sensed, so a back duty investigation can be launched. So at times, this back duty investigation might not be carried out by IFRS staff direct. IFRS might appoint an independent body or independent firm. That is why when you are studying for this certificate, you can have a firm of tax practitioner. So it's not necessarily that you will work with FIR. Everybody, every CITN holder might not work in FIRS because they have a limited number of staff. So this is one of the jobs that you can do. Your firm can be appointed to go and carry out a back duty investigation on a taxpayer. So do you understand what a back duty is now?
Yes, sir.
Okay, so B, you have just been promoted to the post of assistant director. So when you receive this promotion letter, let me know as you are a lecturer so that I will share the wine a bit. So you have just been promoted to the post of assistant director of taxes by FIRS, and you have been chosen to lead a team to conduct back duty audits on companies in Abuja. Those not one company, plenty. So this certificate can allocate a lot of things for you. Briefly itemize 10 of the audit requirements you will attach to your notification letter to the company. So you can try that. In this one, without going to school, But without coming to this class, you should be able to say something. There are some answers you just get even without reading any textbook, especially if you are in the field already.
I will request for the bank statement of the company.
Okay.
The cash book.
Yeah.
Bills paid by the company during the year, their expenses.
Okay.
Then the period under review, the year of assessment.
Okay. Yeah, we have made tremendous effort. That's great. So first of all, you request for audited financial statements for the period under review. The management account, general ledgers, transaction listings, year and trial balance, audit adjustment journals, board of directors minute book, minute of board meetings, minute of tender board meetings, if any, tax files, correspondence with tax authorities. That's correspondence with tax authorities, then tax files, journal vouchers, evidence of payment of all taxes, example, receipts, bank advice, transfer, etc., income tax computations, self-assessment forms, evidence of tax filing, fixed asset register, import documents and local purchase documents, invoice sales day book, sales ledger, debit credit notes, schedule of rent paid, rent agreement, bank statement schedule. So, Ambrosia, you have some of them. You have almost all of you. You would have passed this exam. All right. So that is our class for today. We will continue in this topic and conclude it by next week by God's grace. So do you still have any other question to ask? So that I'll let you go and enjoy your weekend.
No question.
So in the other question, so Ambrosia should move a motion that we close this class. To reconvene next week.
Okay, sir.
Move the motion now.
Okay, I move the motion for the adjournment of the meeting.
All right. So motion is sustained. So ensure that you contact us, contact our admin. If you are joining from other platforms, to contact our admin and get enrolled. So I hope we enjoy the class. Do we?
Yes.
Okay.
I do.
Bye-bye and have a nice weekend.
Bye.
Thank you. I wish you the same.
Right.